Okay, here we go. So what we're going to go through today, as far as our agenda, we're going to take a quick tour of our online resources and go through how to and what ways to find things so that we can see them at home at the sites, to find out what is online available to you all. We'll go through a little bit of what's new for P&P sites and forms, some of our new processes, and then some financial services updates, and then we're going to jump really into the federal and state tax changes and updates. So that's our kind of flow for the day. We'll kind of keep it moving forward. Okay, so I'm going to give you a little tour of how to access online resources, and that will be both. I'll show you how you can access that at home or at the site as the backup option, but at any point in time, you can get to what you need. So I'm going to stop sharing this just a moment here.
Willie, before you restart, I'd muted everyone so that way we didn't have background noise, so you will need to unmute yourself.
Thank you, Mary.
No problem.
Okay, so what we have here is the Prepare and Prosper website. So prepareandprosper.org. So this is our main website. And here you can see, this is how a lot of things happen. People can make appointments, they can find information, find access to all the things. And up here at the top in the purple bar, you have a training site tab. And if you click on that, so this is available at any point in time from anywhere. You can click on the training site. It takes you to the volunteer website where you can see essentially all the tax training courses, all the different items. So basic tax training will be here, some items of what people went through in basic tax training. What you're going to focus on, though, is preparers, hybrids, and reviewers, and seeing all the things that are in here. But there's also CSV, self-employment, and some site manager items here eventually. So preparing and reviewing, you have the tax manual right here, right, as the top item in play. So if you click on the tax manual, it brings you to this current tax year, the tax manual. So you can see there's all 207 pages of it. But I'll show you over here on the right, or sorry, the left column here, that if you click on this bottom outline, there's a document outline. So you can jump to and skip to various items. If you need to look up something on dependents, you can jump right to that section so that you can get a little more shortcut sneak peek there. So this is a quick way of how to find information digitally for the tax manual itself. And the one other thing I'll point out is on here, there is the table of contents, obviously. There is a page on what's new this year that'll is a very brief skim of things, and it points people to the pages to find more information. So there's some federal updates, state updates, but then down here at the bottom, there's new and significantly updated manual sections. So there's some different highlights of things that we put a little more time and attention into. Things like when to paper file or most common scenarios, residency, helping somebody filing on behalf of someone, either a power of attorney or a deceased taxpayer. And then the special extra page on taxpayers with disabilities and impacts to tax returns in a variety of ways of when that comes. So if you have time, you can look through some of those pages as some of the things that had a little more attention to what we had as far as changes in the manual. All right, so then, just a moment. So there's also a little page here about known errors in the P&P manual. So there are a few different items of things that were caught, unfortunately, after publication already happened. One main thing is business mileage for 2025 should be 70 cents and not 67 cents, which was incorrectly not updated. So if you wanted to, you could go into this page and make some little notes or updates to things that had changed for the year that were not caught in the manual before publication. Mostly minor things that come up. We're not perfect and we'd show that, but we can provide information on. Other things that are on the website here, tax training. So this what's new updates training here, the slides are available if you wanted to. Otherwise, we'll talk about in just a moment here, new and updated forms and handouts. So you can see them displayed here. I'm actually just going to open it now, even though I'm going to come back to it in a moment. And then some advanced tax topics trainings, hybrid and reviewer training itself. And then down here is more information about how to get certified. There are some important info, mainly for the basic test on different things you need to look at before you take the test. And then eventually we'll get into tax tips, huddle notes, and then prior year manuals are also in here. So just to be aware of all those things that are in there at this point in time. So just to move here. Okay, so that's just a demonstration of the training site itself. So stop there. All right, so you can access that at any point in time. Again, the Moodle page, the training page, will be one of the 4 screens that opens automatically on tax clinic laptops. So those will come up. It'll be TaxSlayer, the login screen for your volunteer shift, and then the links page that we have to link to a number of different items, to the property tax refunds, to a number of other pieces, and then to that page, the Moodle training site. So if you wanted to see that, you can at any point in time. Okay, so keeping it moving here. So a bit about the tax certification tests. So the IRS materials that were printed, the 4012 specifically, contains all updated tax laws prior to the July legislation that was passed. The OBBBA was passed at that point in time. The 4012 unfortunately did not get updated to fully reflect all of those items. So a lot of the things that we'll talk through were not fully reflected in the 4012. We have them in our tax manual, as well as there are additional resources out there, mainly finished IRS forms that have the updated information. The one main thing that was not updated in the 4012 that is important, that matters, were the standard deduction amounts, because the legislation in July updated the standard deduction amounts to increase them slightly. So it was going to be 15,000, which is what the 4012 says, but the bill passed in July made it 15,750 for a single filer and for married filing separately. So the 4012 does not have the updated standard deduction amounts. Our manual does, TaxSlayer does, everything there. So but the questions that will be asked, they want you to use the 4012 amounts rather than the updated correct ones, or they want you to know that it could be what you see in the 4012 could be 30,000, but it's something in different. There's a bit of a sense of this is where the current state of the IRS and the way that things are functioning, or not as fluidly as you might hope, that they're actually telling us that you should use information from old information to be able to pass your tests to show that you understand and know tax law. That's the summary of about what is happening here. So there's some information in the guide. I think you got it in your bags just to be available for what to do when you, especially more important when the basic test than the advanced test. Okay, so what's new for P&P sites and forms? We're going to move forward with this. We are doing a number of different locations that have changes or shifted. We are still maintaining our presence in neighborhoods or in communities, but just at some different locations this year. We will no longer be at the Urban League for this year. We have moved our North Minneapolis site to Emerge Community Center, which is on Broadway. They previously had VITA site there. So that will be our North Minneapolis location. We will not be at Eastside Neighborhood Services in Northeast Minneapolis. We will move to Las Estrellas School, which is on Broadway again, and University, the old Sheridan School on that corner. A lot of different community organizations are going through a lot of different ups and downs with their situation. They have different reasons why they need to have a more long-term engaged partner or some type of situation where we weren't able to be at their site this year. As well as that, Cappy we still have a relationship with Cappy. However, their building is under construction because they're expanding. They got a nice big amount of money to do a building expansion. And so their building is not usable at this time. So we will be actually at a church across Brooklyn Boulevard while their building is under construction. So the good news there is we'll have a little more space than we did before. The bad news is just different, and it's we have to get used to a number of different things. And so then hopefully next year we'll be back in their new building in a big expanded whole different area. The Neighbors Inc. site, which was just for our Crecimiento Latino shift last year, will now be on Saturdays in South St. Paul and will be open to anybody. And then our Crecimiento Latino focused on Spanish-speaking customers will be at the main office on Saturdays alongside or along with everything else. So finalizing that, more info to come soon.
Willie, we got a question or two in the chat.
Okay.
Someone asked, were the errors fixed in the online version of the manual?
I'm not for sure on that. I'll have to check with Holly, but I imagine that they will be fixed by the time that the tax season comes along.
Awesome. And someone else asked, will the practice labs be as taxes were before the OBBB or after?
The practice lab will reflect current up-to-date law so that it's essentially is mimicking or replicating what will happen during tax season. So it has all the new stuff that we have. It has the new correct standard deduction amounts. So it has what taxes should be. All right, the DIY program. DIY is the option that people have if they want to do it themselves. It's a completely free, no restrictions, no catches. It doesn't try to upsell you. It doesn't try to do anything. It's free, no questions asked for anything that people want to or need to file for individual income taxes. And this year, the income limit for anybody will be increased to $89,000. Just to be aware that if you're at 89,001 AGI, it will not allow you to move forward. So that is a hard and fast income limit. And it's for anybody who wants to try it themselves. So it can work for people who are over income for us, a single person with $60,000. Sometimes they have very easy taxes. You can be here, just try DIY. It's a good option. Or for anybody that you know that wants to file their taxes as well. All right, new and updated forms. Okay, we're trying something. We had tried it over the summer to try and expand the amount and the the number of people who can and will be able to review, knowing that we do have a lot of a good number of very simple returns, especially renters credit only returns, in which most people should be able to look over the data and the information pretty quickly. So we're expanding on a pilot that we started this summer to have different review levels labeled on the review on the customer envelope so that people can identify a little bit more of the complexity of the return that they're engaging with. And so we're asking preparers to label the return so that give the information to the reviewer or hybrid about what is happening on that return. So level 1 is going to be for very basic returns, W-2, renter's credit, M1PR only return, something where it's like simple income and a simple finish of the return. Level 2 will be basic certified extra factor, even as far as just dependents, simple education credits, something other that makes it a little bit more beyond, it's basic, but a little bit expanded. And level 3 will mainly be for advanced returns and returns with questions for experienced reviewers, something that's a little bit more involved. So this will be labeled on the reviewer, on the customer envelope, up on the right below the checking information. So the review level 1, 2, 3, there will be actually numbers there, 1, 2, 3, and not Roman numerals. We got outvoted, said, no, we need actual numbers. So that's what it looks like, and that's what we're trying to do with it. So that's there. Basically, it's trying to help with some of the bottlenecks that can happen with reviewing and open it up to a little bit more. A lot of VITA sites across the country use more peer-to-peer reviewing. Although we want to keep establishing our core reviewers and the importance of them, as well as, and so it's not going to change anything as far as that. It just opens up a little bit more of the possibility of reviewing to others. And it also helps in terms of like, every once in a while, a manager will help reviewing and they're going to get the green light to go ahead and pick something that's relatively easy, if that's because their time might be limited or they might have pulled in many directions. And if they can just help with the simple return, then that's fine as well. There will be coming soon a hybrid reviewer quiz to help hybrid curious people test reviewing and feel confident about quality review. Because a lot of those simple returns, it's really just checking data entry points at that point. We have a new form that's for the tax return next steps form for if people are unable to finish for whatever reason that might be. We're going to ask preparers especially and potentially managers to fill out this form so that we know the customer knows what their goal is and that when they bring it back, we know what they came back for and have some information and some specific items to follow up on. So when you can't complete the return, fill this out. If there is a known item as far as when appointment would be, then we would fill that out. Otherwise, we give them guidance on how to get back to us, get in contact with us for the next steps for what they need to do. So usually as either some type of verification, some income, dependent information, things like that. So there's a front page of this form with all the specific items that might be filled out. And then the back of the form essentially is open for notes with some lines so that people can write in as much detailed information as you want. So it really helps to really specific for some people to be like, not just like, oh, you need a W-2, you'd be like a W-2 from this place or a social security card for this dependent or these types of things in the specific statements. So just to be aware, that will be used and we want to use for everybody that needs to leave and come back. We also have a requesting a rent paid affidavit form for anybody who place will not provide a CRP. We have an information guide handout that we give to people to be like, here is how you apply for or request a rent paid affidavit from the state. We want to make sure the customers tried to get the form from their property owner, made all a good faith effort to do so. But know that Minnesota Revenue will start sending out rent paid affidavit forms starting February 1st, and which previously was March 1st before the changes to the renter's credit. So they will send them out early, knowing the importance of the renter's credit and the fact that people can get it right away. So be aware that we can give some little guidance on how people can request the rent paid affidavit. Briefly, other forms, we have some new K-12 flyers and envelopes that are more P&P branded to give to people. So there's same process, just different look of them. The reviewer log has some new columns to help identify which returns, specifically federal, Minnesota, M1PR, were e-filed or paper filed. And that's really just going to help us on the back end of things to be on top of our auditing and our double checking of our system. We're going to try to do that more efficiently and more immediately rather than be after the words and when people are already upset there. So occasionally a federal return gets filed and the state doesn't get filed or is set as paper or something like that. And we want to check our systems ongoing regularly. And then we do have a new American Opportunity Credit calculator input sheet, which I can show you in a moment, as well as we have a new, we are moving forward with a new calculator, which I believe I saw Mike was here. So we're going to show it. It's not finalized, but just something that people can see and be aware of. So for education credits, we're trying to do a little bit of jumpstart for you all so that essentially the main purpose is that the calculator that we have is going to basically do the math for you and provide options for what to enter into TaxSlayer. So we're not trying to define the perfect example of what's going to be best. We're trying to get something that will lay out the best options for you to enter into TaxSlayer, find out what the best result is for the taxpayer or taxpayer independent, and then move forward with that. Having something both online that you can check numbers with, and then also physical copy to then communicate to the customer as well as pass on to the reviewer to show your work, show what it has done, to show how you got to the best example.
Willie, we had a question in the chat on if
Yep.
the new AOC calculator is in the practice lab.
It is not in the practice lab, so it is not in TaxSlayer. So this is a separate tool that is, you're going to be in TaxSlayer working on preparing the return. When you're in TaxSlayer, then you're gonna go and switch to the tool, which I'll bring up here in just a moment. And you're gonna use these two. I mean, ultimately, if you're a whiz at this, you don't have to use the tool, but it's here to help deal with a lot of the worksheet items and a lot of the ups and downs that was in place in the past.
We had another question in the chat of if they have to paper file with the rent paid affidavit, is that just the MN return and can they still e-file federal?
Correct. They can e-file federal at that point and they would have to paper file Minnesota. So that's where, like on the reviewer log, we'd want to see federal e-filed, Minnesota paper filed, and maybe a brief rent paid affidavit on the comments. Because that's really what we're looking for when we're auditing ourselves is like, why was the federal e-filed and the state paper filed? Well, there is an actual reason, and that's fine. And we move forward at that point. We just want to make sure things aren't stuck or didn't happen that was supposed to happen. Okay, here is the current American Applied Credit Calculator. So you'd still take your information. You'd have the information from the 1098T, both box 1 and box 5. You'd still ask them about any additional qualified expenses, books, or anything else they use to pay for they were required for school. So once you get that information, you can then transfer this to this calculator. Again, this is separate from TaxSlayer. So you'd say, oh, or they have 5,000 of qualified tuition and expenses, and scholarships and grants, let's say they have 4,000 of those. And then maybe they have some other qualified expenses of about $500. So then you can say, is this the student the taxpayer or dependent? Say it's the taxpayer for this. And then for that, and then you just go ahead and generate TaxSlayer entries. So then it gives you options at this point in time. You can have your baseline values, which is just the simple math, the face value, what is happening here. So eligible expenses are going to be $1,500, no taxable scholarships, non-taxable scholarship of $4,000. But then it's going to just automatically give you other options for what you'd need to use. So $4,000 of eligible expenses to maximize the credit, $2,500 of taxable scholarships, $1,500 of non-taxable scholarships. And then a third option, if it was necessary or a good idea to do so, could be used as well. So you would take these two values, once everything else is done in TaxSlayer, you've prepared the full return in that way, enter the expenses and scholarships into the software in this manner, and then move forward. So the other important thing in TaxSlayer, I can show you in a moment, is that when you talk about eligible expenses here, you want to just enter one number into that screen. You don't want to enter any scholarships into TaxSlayer. You don't want to enter any books or qualified expenses. You just want to enter $1,500 in the qualified tuition field. It's because we want to tell TaxSlayer what we want to do, not what it's asking for. Because if you put the values as TaxSlayer is asking, it will only give you one option. It will not give you any other possible scenario. And there are other scenarios that we can try, but to do that, we have to do it what we want to do and not what TaxSlayer is asking for. So that's especially important for the second option. So for the second option, there's 3 fields. You should just put in 4,000 as tuition and nothing else on that screen. And then it will give you the option that is best for that. At that point in time, there is this information here where it's asking for federal and state refund amounts. And so you would go through those scenarios in full, find the best option, and then write those down, but also finalize it with the correct final information on what scenario worked out best for them. So again, this tool is not to find the answer, but is to do the math to basically come up with the scenarios that you use to enter into TaxSlayer. So let's see, sure there's some questions on that.
There are. Would you like me to read them to you, Willie?
Sure.
Is there still a paper worksheet for preparers to fill out to help reviewers know it was tried?
Yes, and I could show you that in just a moment.
Awesome. Someone asked, will this tool be loaded onto all the computers?
It will be on the links document that will be available for all computers. Yes, it will be available for all computers.
Sweet. Someone else said, I missed whether we will be able to save or print out the results from the calculator.
There may be a printable option in the end, but it's just that a lot of sites are not as easy to print at all points in time from all computers. So that's why we're going to focus things on a summary sheet where you're transferring information to that sheet, just basic pieces.
Awesome. And then one more says, in the scenario that a 1098-T shows scholarships being greater than the expenses paid, but the customer otherwise qualifies for the American Opportunity Credit, are there any tips being provided to ensure that the AOC does not get missed or ruled out by preparers?
We're going to try and provide as many tips and push in that as much as we can to be like, just because scholarships and tuition are either even or scholarships are greater does not mean that they are not eligible for the credit. So that is going
Awesome.
to be emphasized as much as possible at this point.
Thank you. And then one final question. Can a reviewer see the tool done by preparer?
No, they won't be able to see the tool done by preparer, but they'll be able to do it themselves if they want to recheck the data.
Sweet. Thank you, Willie. We're all caught up in the chat question.
Yeah, let's see. Okay, here's the basically is a calculator input sheet. So this is, filled out basic information, the name, qualified expenses, scholarships, grants, and then um, putting in the different options for um, the things that get pulled out from the calculator, and then from TaxSlayer, what the end up balance, refund or balance due was, and then what the best option ends up being. And then if it is a dependent, as much as we have, or being able to say what a dependent needs to put on their tax return if they're not there or they're not available. Because again, if it's a parent situation and they're claiming the credit for their kids, we want to do our best to get the best result for the parent. We can communicate to the parent what their kids should be doing, but we don't need to have the kid with us there. If the kids are there, we should not assume that the parents are doing this or have done this unless we're sure that they did it already, because we don't know what the parents are going to do or not going to do. We should focus on the person in front of us and the best result for them. Okay. Any other questions on the tool? Yeah. So the form should be filled out manually by everybody. So because that is just the easiest and smoothest way to transfer the information from prepared reviewer to have the conversation with the customer to go through all the details that people need to go through. Um, any other? I think both Barb and Mike are here. Do you have anything else to add to this at this point while I get the screen switched over?
I don't have anything to add other than it might end up looking a little different. We're still working out some design stuff, but yeah, especially the first few weeks, I guess feedback on it will be important. So don't hesitate to shoot an email or have your manager write something in the Slack we have if you're working with it and you have some thoughts. This is I know someone asked if it's in practice lab. It's something I'm making, so it's like our tool. So we do have the ability to change it, which is rare among the things that we get to work with here.
Mm-hmm. Yeah, and I want to have a big shout out to Mike and to Barb, who have been the leaders in crafting and putting this together. So it's been very helpful, and we're excited to keep rolling with it because it does a lot. The math has been the challenge for a lot of people, but that is what. Okay.
Bob Schaefer was another big part of it also.
Yes, absolutely. Okay, keeping moving. For refunds, the one thing that is happening is that the IRS is phasing out of paper checks. Paper checks is not just the IRS, this is the federal government altogether for any benefits that are happening. So people who get Social Security benefits, SSI, everything have been going through this process to get their payments phased out of this, and it will be coming to checks as well. TaxSlayer will still offer paper checks as a refund option, but refund will have significant delays. They very likely, what we've heard is that if they request a paper check, people will get a letter sent to them verifying if they have a reason to need a paper check, if they don't have a bank account or something like that. Otherwise, there may be an option for them to enter direct deposit in after the fact in their own account, but their own account is a hassle to get into at times. And so it is really a giant hassle to get a check. So we want to discourage people from doing so, and we want to let people be aware of that. It's not impossible or not completely not an option, but it's just something that we really want to push. We have prepaid debit cards that people can open on the spot. People can look up their bank account information. There may be more of a need at this point in time for people to get direct deposit information and come back to the site. Unfortunately, we're doing our best to prompt people to bring them or to try and open an account before they come in. But this is something that is hanging over things, and we don't know a lot of specifics as far as how long it might take, if they will, what will happen with paper checks on the IRS side of things. But we know that it is a giant hassle to request one. Minnesota Revenue will still issue paper checks. So if somebody is just getting a renter's credit, just getting a property tax refund, no federal refund, a paper check is a viable option on that side of things. What should volunteers? They should inform customers of the changes, let them know about CFR prepaid debit cards, encourage them to look up direct deposit information when they come to the site. If they insist on a paper check, alert them of significant delays, and the process may involve responding to a letter from the IRS. All right, so that leads right into some financial services updates. So we do have a new green form of the financial services form. It's no longer called Boost Your Money. It's a little confusing for that. It's just acknowledging that these are just some additional services available to people. Redesigned to be less like a menu, more like a conversation starter between CSVs and customers. So a couple things we want preparers to be able to do want preparers to share the refund amounts or balance due. I know some of you do, some don't, but we want that to be a part of the process because we want people to be thinking about and looking into what things we can. You always will say someone's going to review it to verify to make sure that this is correct, but this is what things are at this point in time. Someone will look over the return. The numbers may change. We have a team effort here. Two people look at all returns through our process. And emphasize, customers to be empowered to think about, consider what they want to do with their refund, and that they're aware of what's happening. So yes, from a reviewer side of things, that may mean if returns do change, you need to engage the customer to have a conversation. But if something is changing in a significant way, that would hopefully be happening more regularly already.
There's a question. Oh, sorry, Willie.
Go ahead.
Somebody asked, can anyone get the cards? I believe that's in reference to the CFR cards that you were talking about a moment ago.
Yes, anybody can get the cards. So some of the challenges that come up are that if somebody doesn't have a physical they need a physical address for it to be mailed to. So that can be somebody they know or somebody that they're feel safe about getting mail delivered to. They just can't use a PO box or a temporary address like that. It has to be a physical address, but anybody else can get the card. Yes.
Awesome. Thank you, Willie. I see Chris Danner also has his hands raised. What is up, Chris?
Yeah, I have a question that might be just a tag wordy, so I figured it's easier to just speak it. In the practice lab, I was noticing that the PDF that it generates once you plug everything in and you preview the return was showing kind of a form attached to it that basically shows, I think it's intended to show, like, with the same information or the same inputs, how would the customer's refund have been different in prior years? I don't know if you've seen that, Willie. I was just curious if you know of TaxSlayer. Is that intended to be something they're introducing into the main TaxSlayer VITA site? And if so, like, just curious if we have any guidance on how we should or maybe should not use that.
I don't know how it's used there. I know that they have been implementing and it's been there, but they're made more prominent, a like comparison page where people can see the difference between one year and the next, that people can utilize. And I don't know, I think it'll be an option if it is pulled up for us, and we don't necessarily think it's going to be automatic, but there are situations where it can make it a little bit easier to compare one year to the next. if people are confused about why their refund changed in some way or capacity. So that may be an option of something people can use for that. Is that kind of what you're referring to?
Yeah, I was more trying to understand. I think I was following the logic there, but it's not actually showing the customer's actual tax history, but it's more just showing like if you had this same income, all the same inputs in 20, I think it went back to 2023, like here's how it would have been. So I think it's meant to be a tool to show customers like the impact of tax law changes. But I just was curious if we were going to get any more guidance on that because in the way it came across in the practice lab was like it was attached directly to the return when it got generated. And so it could be something, if that is the case in the main tax layer portal, that we get some questions about it from customers if they see it.
Yeah, I'm not sure if we'll be actually including that in customer packets or not, but it could be something that's useful in a conversation during or within the tax prep. We don't have
Gotcha.
any current guidance, but we can decide to provide it both on that and in terms of like how to access information about, because there is something that you can see an actual breakdown of their actual tax return changes if they came multiple years. So if their stuff is carried forward and in our system, there is a way to see 24 to 25 actual tax return differences in a breakdown manner. And so we can provide a demonstration of how to find that and or the form that you were referring to as well.
Cool. Sounds good. Thank you.
Mhm. Okay, so for financial services, the couple things that we want everybody, all preparers, to be involved in is a couple things at the top of the financial services form, and that is mainly the save and win contest. So are you saving? Do you want to save any part of your refund to enter the contest to encourage emergency savings and putting some away? You could save at least $50 for a chance to win 100. And then to really dig in on direct deposit as the second option, are you interested? Do we have prepaid debit cards? Do you have a bank account you can access? So that is already a part of preparing process, but just digging in, digging in a little bit more on direct deposit, encouragement and options that are available. And then from there, you can ask customers they have a chance to check out the free financial services on the rest of the form. For a little time, there are a number of different items available if people are interested in pursuing additional information on credit or debt management, or a number of different options that really kind of tie into their financial situation that they're digging into on their tax return itself. And then more important is that we want you now to bring this completed form to the CSV station or to the CSVs as they direct you to, so that they have as much time as possible to chat with the customer and provide those referrals or tools. So a lot of times the form gets kind of left aside, pushed aside, doesn't get on. So we want it to get connected to the CSV as soon as possible so that those things can be worked through and handled by that side of things. And then after tax prep, tell them that this is a good time that connecting with the CSV or somebody if they have connect questions on the other items and other services that we have available for people. Just knowing that you talk to people more, listen to some of those different things that they talk about, paying down debt. If they talk about different things that connect to different options, you can point them in that direction if that makes sense to you and if that works out. The CSVs, again, are the experts on financial service and referrals. They need the form as early as possible. CSVs are trying to connect with every customer, sometimes during tax prep. There may be natural pauses when preparers are entering data in the tax layer, and someone may come over to engage with them. It's very important, especially if somebody wants a prepaid debit card, to try and get that to happen as early as possible in the process. There will be an additional actual CFR training I believe on February 2nd that can be available to anybody. So we'll open it a little bit more for preparers even to look into the process of enrolling or opening prepaid debit cards. because it is a relatively simple process and you have all the forms and all the information that you need to fill out that entry or that enrollment option, because you have their full tax and financial situation in front of you. So many taxpayers do already have CFR accounts. We can use them to look up. We can have somebody look it up, or if they used it last year, you can find it in the tax return from the previous year and enter it from there. For those without direct deposit, we can do that. Setup takes about 5 minutes, but it can be tricky sometimes to find. Our CSVs are often very busy. Check in, check out. If there's not many on site, then find a manager or ways to open that up. Because it is the focus card, is the card that we have. There's no overdraft or minimum balance fees, free ATM networks, mobile app, and online banking. They can use this. There's a savings account, and then it is reloadable or can be made portable for deposits beyond their tax refunds if people are interested in that. Okay, we're just trying to make sure people have an informed choice. So there's more about all the financial services offerings on pages 20 and 21 to get a high level knowledge of the situation itself. Okay, and then briefly, you may have gotten an email in the past about the sunsetting of the FAIR program. The FAIR program, which was in connection with Sunrise Banks as far as offering checking, savings, and credit builder loans. The relationship was lost last year as far as Sunrise Banks not moving forward with that. And at that point in time, it didn't make sense to re-engage a bank partner. So we have moved on from that as a process of what we have to offer. However, now we do have a team that remains who is able to provide banking and credit support, and that can happen during the clinics, or especially now can happen much more after the fact, or after or even before. So we have a kind of expanded, think of it as kind of financial services expanded beyond the tax clinic. So we have the ability to provide free one-on-one support around banking and building credit, after tax appointments, navigation to opening accessible banking and other credit builder products. And we can also open CFR cards outside the tax clinic as a banking alternative. So just briefly, there are some things that they can do in this team that we can't even do on site, such as doing more credit counseling, pulling an actual credit score rather than just a credit report itself. So there are ways it's an expanded option for people to go beyond what may be available at the site, or to do it at a time that's more convenient than kind of rushed in the moment at the tax site itself. So this will be more something that's available to people. So if people are not interested in the moment, you can mark that you are interested in being followed up with later, or to make an appointment with somebody on another day. Okay, let's make sure we answered all our questions before we jump into tax changes. By using CFR cards, should we verify the customer still has the physical card? If they lost it, do we ask for a new card? If they lost it, it's probably best to ask for a new card. Just in terms of making it a smoother process, because there is a way to go on to the customer service line and request a replacement card. So if somebody lost a card and there's still money in there, they definitely want to get a replacement card. But we want to try to reuse them if they have access and it's still valid, still good to go, because it gets really confusing if people have multiple cards. They don't know which one to use, or which one has money on it, which one the money is coming onto, all those different things. So use it, but if they've completely lost it, they have no idea where it is, we can get them a new card.
And Willie, are the routing and account numbers that they use for the deposit different than what's physically on the card, right?
Correct. The number on the card is the card number. On the front of the card is not the routing, is not the account number at all. Money Mentors program is still running strong. We'll have information about if there are that's still a good option for people. The cards are valid for at least 2 years. I'm not sure the current, I think it might be 2 years, not sure the current exact amount, but it's a chunk of time from there. Okay, let's dig in because we got some federal and state tax updates to talk through. This is why many people are here. So we're going to roll through this. Is not a huge amount of things, but for the people that impacts, it can be pretty impactful. New deductions. So the tax bill that passed in July focused on a number of specific deductions available for certain jobs or professions or certain situations. So there are new deductions this year, and we'll talk again, remind you what a deduction is and where it fits into the tax return. So there is a deduction for seniors. There is no tax on tips, no tax on overtime, and no tax on car loan interest deduction. The top three are going to get the most focus and most attention in this training and at tax sites. All can be used in addition to standard or itemized deductions, alongside them and after the fact. The disqualifiers, the disqualifiers are for the top three, the seniors, tips, and overtime. So you cannot have an ITIN and you cannot file married filing separately. Social Security numbers are required to utilize the top three. The bottom one is okay for an ITIN and a married filing separate customer. And all are found on new Schedule 1A. So we're just adding things and adding forms and adding schedules. It's just a lot of fun around here. So again, a deduction is taking with the flow of the 1040, flow of the tax return, you add up all of your income first, your W-2s, 1099-Rs, everything that's income-based, add that up, and then you subtract any adjustment, the student loan adjustment, other things in there, gets you to your AGI, adjusted gross income. You take your adjusted gross income and you subtract deductions at that point in time. First subtraction would be the standard deduction, and then you can add all of the other additional deductions that are in place at this point. And that brings you to taxable income, which is then what tax gets applied to the taxable income at whatever percent or percentage that you're at that point. So these deductions are here to reduce taxable income, reduce tax liability. And that's the benefit that they have. If someone's AGI is $12,000, their standard deduction wipes it out. The additional deductions are not of any value at that point in time. But if somebody's AGI is $50,000, their standard deduction gets $15,750 wiped out. They have any of these additional deductions that can be very helpful. Okay, deduction for seniors. This is for taxpayers 65 and older. They may be able to claim an additional $6,000 per person that is over 65. So $12,000 if both partners are over 65. This is in addition to the standard deduction and the additional amount for 65 and older that gets added to the standard deduction. So if you have a married couple, they are getting $31,950 for their standard deduction. They get an additional $1,600 or something like that per person as an additional deduction on their standard deduction. And then they get an additional $12,000 of deductions for being 65 and older. So they're getting up over $43,000 of deductions off the bat. This does start to phase out when modified AGI exceeds $75,000 for an individual and $150,000 for married filing joint. So this happens automatically in TaxSlayer. This was the way that they worked around to try it. There was trying to be a no tax on Social Security. There is tax on Social Security, but this deduction wipes most of that out. However, if somebody's getting Social Security at 63, they get no additional deductions. And if somebody is not yet getting Social Security at 66, they still get these additional deductions, even if they're not yet pulling their Social Security amounts. Okay, no tax on tips. Taxpayers in certain tipped occupations, and those are specifically laid out by the IRS, may deduct up to $25,000 of tip income. The W-2 Box 7 often has tip amounts reported to an employer, but the deduction does at this point require additional entry in tax layer. So it is not an automatic flow to that field. You still have to transfer it. Other tips amounts included in Box 1 require taxpayer or employer to track and to verify and to have the information. So if somebody is not doing the accounting in a way that separates income from Social Security income to tip Social Security income on the W-2, then they need to have documentation and a way to show that some amount of their income was tips. Tips for an employee not reported to the employer must be reported separately to be deducted, must be entered in taxpayer deduction section to claim the deduction, and requires advanced certification. And they're going to need a log, some way to show tips that they have. Also, to be aware that you're reporting income to get it deducted off of your state or federal taxes. It still gets added to your state taxes. It still gets a part of your AGI. It still affects a number of things to report the income, which they're supposed to report any and all points in time, but just saying. Most of the things for employees should be reported on W-2. And that's what we have to rely on for this year. For next year, for tax year 2026, they are requiring a Box 12 code for reporting all tip amounts on the W-2 for all types of tips for employees. That is not happening this year because the IRS didn't require changes to the W-2 this year because the tax law got passed in July and people were not. Now they're trying to make everybody do it the same way going forward, but this year might be a little choppy and messy, especially when we get to the other deductions. So this is general process there. Self-employment tip income. Tip income received by self-employed individuals may be deductible if tips are included on a tax form, tips are included in income that is reported on a tax form filed with the IRS. So a 1099 NEC, a 1099K, or a 1099 miscellaneous. If a taxpayer works in a field the IRS lists of tipped occupations, or if the amount of tips is clearly documented either by the employer or the taxpayer. So common examples there are the Uber and Lyft, the gig economy drivers will often have a report or a breakdown from their employers, reported on a tax form very often. 1099 NECs states this is the amount that is tip income on a report they get from their online account. Totally good to go to report and use as tip income as a deduction. However, they're going to pay self-employment taxes on that and state taxes. It does not eliminate those taxes. So the no tax part is a little misleading there. So an example here, let's say Jeff is a tour guide. He works as an independent contractor and receives a 1099K for his income of $25,000. I'll just let you know that this example is taken almost completely from the IRS instructions on this form, or on the 1040 instructions. So let's say 4,000 of his 25,000 were from tips included on the 1099K. Jeff could include the 4,000 for the deduction because it's on the tax form. If he received an additional $500 of cash tips not included in the 25,000 in the 1099K, Jeff cannot use the deduction for those $500. He still was supposed to report the $500 as income, but because it's not included on an income statement, then he is not supposed to use the deduction for this amount. So that is where the lines are drawn right now for this year. It may change going forward, but that's an example in the moment. All right. Okay. No tax on overtime. Taxpayer who's received overtime compensation may deduct the pay that by law is required to be paid in addition to their regular wages. So that is also an important statement there. So for an example of that, if Perla's regular wage is $20 an hour and she makes $30 an hour for overtime for time and a half, she can deduct the total amount of additional pay, which would be the additional $10 per hour as a deduction. So not the full wage, not the $30 per hour, but just the half, the $10 extra. For tax year 2025, overtime is not required to be identified separately on a W-2. Taxpayers must know or provide documentation showing overtime or the overtime premium, which is the extra amounts. Could be last pay stub or other report from their employer. We'll need to identify the amount listed is the total income received for overtime or just the extra amount received. If they get a documentation that is total overtime pay, we may need to divide that number by 3 to find the half within the time and a half amount. Like I said, this is not going to be straightforward for tax year 2025 because there's no reporting requirements whatsoever for the employer. It may be the case that if people want to pursue this, they'll need to go back to their employer and there may need to be, get back to us. We'll look into filing an amended return for you if you think that you have substantial amounts of overtime to utilize. Starting in tax year 2026, the W-2 will have a box 12 code to identify overtime amounts. But for this year, it's going to be a little bumpy to find and to utilize that.
Willie, we got some questions in the chat.
I would imagine so.
I think 1 or 2 people have asked for SE, can we get a list of how various gig companies report tips on their end of year statements? They label different payouts in different ways.
We will work on, I think there's other VITA sites that have done something similar to that and can see if there's a good resource for that. We'll do his best to provide something.
Gotcha. Somebody else asked, I see the P&P manual does not have a list of tipped occupations that allow deductions. Where is the best place to find that? And then Rosa sent in an IRS link that looks to be helpful.
Yeah, there are mainly IRS links since we're trying. The list is long and extensive, and it's most of the things that you can assume, like this is where tip people, it's like, does your employment usually receive tips? Restaurant workers, hotel service workers, massage therapists, people that are obviously drivers, Uber, Lyft, DoorDash, all those types of things. If you're in a position where you normally get tips, then it's good to go. It's just like, it's avoiding this whole like, oh, I'm contracting you to do this job. I'm going to give you a base pay of very little and tip you a lot of the money. It's just avoiding that. And also the tip ratio has to be proportioned in a way that makes sense. Is like, oh, it's a 20% or is something standard amount.
Gotcha. Thank you. Somebody asked, does TaxSlayer calculate the tips deduction?
TaxSlayer does not. You have to do a separate entry, which we'll show you in just a moment here. But we have to know the tip amount, put it into a field in TaxSlayer, and then it will calculate the deduction from there.
Awesome. Someone asked, should we be asking customers about their overtime or let them bring it up?
We can ask them about their overtime. Unfortunately, it is not listed on the IRS intake sheet, and we didn't get it onto our sheet in time for that. So it will have to be an additional question.
Gotcha. And one more. In the Jeff example, if the same scenario were true, but he were a W-2 employee, he could include that extra 500 as long as he reports it as tip income first. Is that correct?
Yeah, they would have to self-report that income. And then if you self-report tip income as a W-2 employee, it's on a form that is sent to the IRS. And they
Okay.
consider that good to go.
Awesome. Then, wait, there's another one. Sorry. Some people get extra pay when they work on holidays. Is that considered overtime? In the chat, someone else said no. That's right?
Nope,
Okay.
that is anything, it has to be legally required to give you overtime pay. So sometimes employers give additional incentives for people to work holidays, time and a half for those days. That is not overtime. That is something your employer is doing for you. Also, if your employer provides double pay or 2 times double pay for overtime, you can still only deduct the time and a half because that is what's legally required to be given.
Gotcha. Okay, now we have 2 more questions.
Yep.
Since overtime isn't required to be identified separately on 2025 W-2s, what kind of notes are preparers expected to provide in the paperwork to help reviewers?
Definitely notes. I think that it would be very helpful to have some documentation from the customer, a pay stub or something that actually shows. And I think we're going to actually require something to be given to us and not just because of the confusion in what the numbers are and are not. I think we need actual documentation from the customer for this, unfortunately.
Awesome. Thank you. And last question, shift differential would not be included in overtime, correct?
Correct. It has to be the amount that is over the legal. So amount over 40 hours is generally what we're looking for. 40 hours a week as legally required to be given overtime.
Awesome.
And Minnesota doesn't really have any other overtime laws. There could be other laws for different types of employment or types of employers for different types of service workers. We probably won't see many people in those situations, but you never know. Yeah, and it isn't more of the 40 hours a week type of thing as well. That is what is legally required. Part-time employees will only get overtime if they work more than 40 hours in a week. So if, let's say, you're a seasonal worker that works for a tax company and you work 50 hours because it's really busy, then you can get overtime and overtime pay even if you're not a full-time employee. So we're going to have more information and more handouts or guidance coming forward soon. A lot of this is coming out really late in the game as far as how it's all going to play out. So we'll try to keep up and keep you up on it. We do need to keep things moving, though, to get a few other topics covered as well. Okay, tax layer. So deductions for seniors happens automatically. So that is not as much of a worry. Deduction for tips and overtimes right now still needs a separate entry. You go into the federal return, into deductions, and in there is a field for additional deductions, no tax on overtime, tips, car loan interest, and then Schedule 1A additional deductions, you enter in no tax on overtime or tips, and then from there, no tax on tips, the amount on W-2 box 7. So that's even in here, it only asks for included on form fields. It doesn't ask. And so 4137 is when employees self-report tips not included in W-2. And that's not included in a W-2 anywhere. So not included in box 1 amounts. Just report given to you. You didn't tell your employer at all about them. Qualified tips included on the self-employment forms as well. No tax on overtime. And then it's usually the amount that's included in box 1 of the W-2. And it does say here, but break down, if it's over half, then it's just the 1/3 of that amount, only if the employer worked more than 40 hours in that week. From there, it will transfer to the deduction amounts. All right, briefly, no tax on car loan interest. Disqualifiers for other new deductions don't apply. You can have an ITIN, you can married filing separately. Must be interest paid on a new vehicle to loan to purchase a qualified new vehicle, brand new vehicle, not a used vehicle. They must have the VIN when filing to show that or to demonstrate that, can deduct up to $10,000 of interest on that loan. There are other qualifications for the loan and the vehicle. The vehicle must be either American made or American finished vehicle. And what qualifies for that, page 115, as well as the IRS instructions to dig in on that. Don't expect it to come up very often, but if it does, you may need to do a little digging on what qualifies and what doesn't. And briefly, we do need to mention what the actual name is: Trump savings accounts. They are basically a child savings account open for eligible for all kids born between January 1st, 2025 and December 31st, 2028. They're eligible for $1,000 pilot contribution, $1,000. They must be U.S. citizens. Taxpayers must have social security numbers. There is a new tax form created for that, can be filed with the federal return to establish a Trump account. It is not currently in TaxSlayer from what I can see. So if there's more things that we're supposed to do, we'll let you know. But other than that, it may be something that is more emphasized coming down the road. It is actually a very beneficial thing to people to have child savings accounts set up and to be able to utilize and to have function going forward. But we're not going to focus much time on that immediately. It can also be done and filed after the tax return as well. It doesn't have to be done alongside it. Okay, but there are some new eligibility changes for the federal child tax credits. So the federal child tax credit amount for the non-refundable part increased to $2,200. However, Social Security numbers are now required for the child tax credit and additional child tax credit. Or one spouse must have a Social Security number if married filing jointly. This is a big change for anybody who is filing with an ITIN. They've been getting the federal child tax credit for the whole time. But ITIN filers no longer qualify for the federal version. They still qualify for the state version, as well as they qualify for the credit for other dependents on the federal side. However, what that will end up happening is Juliana has an ITIN. She claims her two children, 12 and 8. Her AGI was $30,000 for 2024 and 2025, just to cross comparison. In 2024, she received $813 of the non-refundable child tax credit and $3,187 of the additional child tax credit as a part of her refund. So now the ITIN filers don't qualify for either part of that, the refundable or non-refundable part. In 2025, she'll receive $813 of the credit for other dependents to bring her tax liability down to $0, but she will not be eligible for any refundable additional child tax credit. So outside of any withholding or any other credits or payments that she has, her refund will drop down. Her refund will drop down by $3,187 for this year. And that's obviously a huge change. She will still be eligible for the $1,750 of state child tax credit for both of her kids. So $3,500 from Minnesota state tax return. So there's still an incentive and a good reason to file and to move forward with things. And we are still here for that, for people who need to do that. She's still obligated to file, just not getting the same results as in the past. Briefly, changes coming next year for 2026. Residential energy credits, all parts expire after tax year 2025. It's too late to get anything updated on your house and get a tax refund for that, unfortunately. Charitable contributions up to $1,000 or $2,000 married filing joint can be deductible even if not itemizing. More deductions coming. A Social Security number will be required to claim education credits, both American Opportunity Credit and Lifetime Learning Credit. And then gambling losses will be deductible only up to 90% of winnings, down from 100%. And then changes coming next year, or basically kind of right now, for the premium tax credit. I'm sure many of you have heard about healthcare subsidies changes that is really kind of tied into premium tax credit and tax credits. So as of 2026, the enhanced premium tax credits will expire, making initial coverage costs go up and sometimes go up substantially. That's largely because there's not tax credits to offset or to help pay for or make health insurance affordable. Along with that, repayment limits will expire. So during COVID and afterwards, the people who applied for premium tax credits or advanced tax credits had a little bit of a limitation to how much they'd have to repay if they miscalculated or underestimated or how much income they would have. Taxpayer who underestimated their income would have to significant repayment of credits added to their taxes. And then the third part that goes along with the repayment limits is that anybody who exceeds 400% of the federal poverty level must repay all credits they receive, any amount of tax credits that we receive in order to help pay for their health insurance. And the thing is, a lot of people don't even realize that they're getting tax credits when they apply for MNsure health insurance online themselves. They are very often getting advanced premium tax credit in order to help them pay for that. And then they have to reconcile that on the tax return next year. So we're trying to, again, put some information together so people can be prepared. They may come when their tax return is basically done and ready, not a lot they can do, but next year, it could be even substantially worse with the repayment limits going away and basically the cliff now existing. If people go over that cliff, they repay everything. So the repayment limits that have existed for a while. So example, if you're under 200% of the federal poverty level, your repayment limit was $375 for single, $750 for others. From up there, it boosts up. So if you're higher income, you may have a limit of $1,625 per other taxpayer. But essentially, there are situations where, especially if someone's married, filing separate, or if there's income changes that drastically change things, and they don't tell MNsure, then they can have thousands of dollars to have to repay on their taxes. So we're trying to avoid that. And Mark said, I don't think any of our taxpayers are over 400% of poverty level. That's very likely the case. One thing that I've caught somebody is that they don't realize that Social Security benefits are included in your calculation for this poverty level. It's modified adjusted gross income, which includes Social Security benefits in that calculation. So have had somebody who had a lump sum Social Security benefit payment and their income, which put them up over the 400%, and they had to pay back many, many thousands of dollars, and it was pretty rough. I weren't actually a P&P customer, it was just a phone call, and I had to do the research and figure out, oh, that's terrible. The poverty level is federally defined. It's based on family size. So I don't remember what it is for one person, something like $14,000, $15,000 for a single person. So 200% of that is $20,000, $30,000. And for family size will increase from there. So for a family of 2, 3, 4 people, the federal poverty level is pretty high. I mean, not very high in reality, but for 400% of that is well out of our income range. Okay, got to keep moving. All right, so we are a little behind. It may take a little bit longer to get through state changes, but there are some vitally important things within here. There's not a lot, but the things that are in here are important. All right, so last year, they, unbeknownst to us, with the tax changes to the renter's credit, they snuck in a little provision saying last year we were under the assumption that we didn't have to give an explanation for when rent was greater than income. However, many people at Revenue fought back against that and said that if we have all these returns filed with rent greater than income, we're going to send out a lot more letters if we don't have any information to tell us what is supposed to happen here, where this income is coming from. And so with that in mind, the Minnesota Department of Revenue, they actually showed this to us early, and we tried to fight back a little bit, but they didn't give very much in terms of what they wanted to do. So when rent is greater than income, we do have to provide not just a simple explanation, but we have to actually provide as much as possible the types of income that people received that helped them pay their rent, as well as the amount that they received. Now, we'll get into what that means and what that can be. So we're listing non-taxable income sources and amounts, but only when rent is greater than income. So when rent on CRPs is greater than federal AGI, but that is a lot of times. List non-taxable income sources such as SSI, MFIP, non-taxable scholarships. It can be sources of income including things that are not included on the property tax refund, such as child support, such as friends and family help me pay my rent, such as savings, student loans, whatever it might be. We just need to be able to show that someone had some type of income that should not be part of federal AGI and that they had enough income to pay their rent. And that's the ultimate goal. We don't need to know every single bit of their situation, just enough of having income that helped them or what they use to pay their rent. This is the top of the Form M1 rent lists a type of. So again, these types of income do not affect the renter's credit amount, but the state wants to see a demonstration of how you paid your rent when it's greater than income.
Willie, someone asked if you need to list amounts for gift income, like rent paid by family members.
It's going to be safe to provide gift amounts, but essentially if they're using it to pay their rent, you're just basically getting up to the point of paying the rent. It can be left off if that's what's best for the customer. You might say they might ask for it later on. If the customer don't have documentation for their non-taxable income, see if they know the amounts they receive monthly or yearly from that type of income. Make sure their income sources are enough for their total income to exceed their rent. The state has told us specifically that we can use a good faith estimate if people don't have the info or are unsure of the amounts. Because one of the goals is try to avoid sending people away as much as possible for this info for the renter's credit. For the property tax refund, since it affects the calculation for many of these income sources, we need the specific value. But for this, if they say, oh, I'm on MFIP, and I don't know, I think about $7,000, $8,000, as long as it is certainly exceeding their rent amount, we can put an estimate in there because it doesn't affect the calculation. Okay, advanced child tax credit payments were started last year. People were able to receive part of their refund ahead of time, but that means that now they need to reconcile that on the current year tax return. So people who chose to receive the advanced payments of the Minnesota Child Tax Credit in 2025 now need to include that information on their current tax year. They will receive a letter from Minnesota detailing the info needed to reconcile in the software. Page 161 of the manual lists info needed if they do not have that letter. They will need a copy of their 2024 state taxes if they don't have their letter. If we filed it, we can look it up. If we did not file it, they need either the letter or their 2024 state taxes, or we can't finish their return today. There will be a question on the intake sheet, and likely if they got the payments or they forgot or they didn't include it, then the state's likely to adjust their refund or their refund amounts, hopefully before they send them their refund. There is what's called the minimum credit base. It's not really like something to dig in on, but essentially what it means is that if people signed up for advanced child tax credit payments, and as long as they then currently are eligible for any amount, as little as $1 of CTC for this year, then they can maintain, they don't have to pay any amount of the advanced payments they receive back. They get a minimum credit base of those credit payments. However, if they are now eligible for nothing, for $0 based on a significant increase in income, they do have to pay all that back. It helps limit payments when income goes up. So this is part of the calculation that is included when you reconcile for the year. So for when people are coming in this year, they do have the option to continue to request advanced child tax payment process. So the process is that for this year, for going forward, for getting payments in 2026 for their filing taxes next year, on page 3 of the gray P&P intake sheet, they can indicate interest, or through a conversation around the ACTC explainer. We want preparers to be able to describe some of the options, what is available when the payments come. And then if people are interested or you want to see what the payments would be, you can do a couple things. In the manual on page, I believe it's 161 actually, there is a chart that can lay out if somebody is within the income before the threshold of where the phase out starts, the standard amount, if they're below the incomes listed on that page, in that chart, that is what they will get, is those payments 3 times August, October, and December. So you can give them a little head start. If their income is over the amount listed on the chart, $31,950 or whatever it was for a single person, then you have to go into the software specifically to find what the value actually is. And to do that or to sign someone up for the payments, you enter all the information of the return. In TaxSlayer, go to state credits, to working family credit, and then there's a box here in this box that asks if this option is defaulted to no, you would choose yes. To then find the actual amount of the payments, go to the PDF of the return, view the return itself, and scroll down to schedule M1CWFC line 31 to see the actual amounts. Remember though, if somebody does not want the payments to go back into the schedule in TaxSlayer and change the answer to no before you do anything else. So if they want to talk it over and figure it out, well, how much the payments will be, but they decide ultimately to not do it, please don't forget to change it to no. Very important, because otherwise it will sign them up for it. At that point in time, there is going to be 2 forms that will be available for customers. One will be for them to take home, and then one will be for us to keep. The one for them to take home, there is a field to list the 3 payments and how much they will receive. Please do so and make sure that the customer understands. And then the other form is for them to sign and for us to keep. So those forms are listed here. The one on the right, customer keeps it, and this is where you can help ask the questions, go through the scenarios, and then at the bottom, fill out the forms for them. The other side of the one on the right has options for customers on how to cancel the payments at any point in time, to update direct deposit or update their address at any point in time, and how to do that on the Minnesota Revenue website. The form on the left has a breakdown of what each volunteer should be doing, and then the place for the customer to sign, indicating that they understand the situation. Very briefly, other state updates and reminders. Very small things, but just so you know, the SEIU, the state or the Service Employee International Union, sent out one-time payments of either $1,000 or $200 to strike-related payments. They are taxable to the federal, but can be subtracted from the M1 and M1 PR. There's also a new provision for coerced debt forgiveness. So if somebody has debt forgiven from a scam or some type of identity theft issue, the income can also be subtracted from the M1 and M1 PR returns. And then there is just a reminder that the student loan credit may be becoming more common as the COVID-based forbearance on student loans ended, or is now people are now paying student loans again in a more substantial way. So there may be some additional need to go to the credit, which is in the manual on how to look into. Let's just make sure if there are other brief questions. Doesn't look like it. And then finally, last thing, I know you're wondering about all the little things that come up at Prepare and Prosper. We just want you to know that our color stickers for advanced or hybrid reviewer or basic we have different shiny fancy stickers for green for advanced, copper for hybrid reviewer, so that you can be identified and alert to that. So you can have incentive to take your advanced test or to become a hybrid reviewer. So that is there. All these things help out the site, stickers, everything, make it happen. Okay, that is our training for the day. A reminder to take your certification tests, to as much as possible take the advanced certification test for anybody returning. If you are still interested in being a hybrid reviewer, we still have chances and opportunities for that. And I believe your site and shift information will be coming out next week, so be on the lookout for that. Other than that, Mary, do you have any last things to add?
No, we're hoping to share site and shift placements. We're hoping by the end of the day, Wednesday. We're still doing the final rounds of schedule Tetris, trying to maximize everyone's first choice, all that stuff. And then we have some late volunteers, joiners that we're onboarding. So bear with us. We will get it out as soon as we can. Thank you all for your time.
Thank you, Willie.
Hang out if you guys have any questions. Otherwise, thanks everybody.
Thank you.
Look forward to seeing you soon.
Thank you.